All right, everyone. Good morning, good afternoon, good
All right.
evening. We have today on being CMT, Jay Woods. Jay Woods, I'll give you a little backdrop though we'll cover him with a lot of questions. But Jay is the board of member has been for executive floor governor at NYSE. It's a very, very respected place, which is held by 6 people, I guess. And Jay has recently joined Freedom Capital. Prior to that, Jay has been with the DriveWealth. Though I don't want to, give all the background. In this interview, what we're going to do today is let Jay tell his journey from being CMT early days, how he was attracted to markets. So Jay, just introduce yourself and give us a backdrop about your experience in last couple of years.
All right. Well, first of all, it's a pleasure to talk to you.
Thank you.
It's always great to reach out to the great people of India as well. I got to spend about 9 days there. We went to the APAC Summit for the CMT Association, which I believe you were there for.
Right.
And we had such a great time. And the thirst for knowledge in the technical analysis community from your community was unbelievable. It was a great time. So it's good to be back. It's good to talk to you. And yeah, my journey, it all starts and finishes right behind me at the New York Stock Exchange. When I was a young kid, this is how I encourage people to learn about the market, learn by doing. I was lucky enough to get 2 shares of a stock. It was IBM. And, it was under the conditions that you have to chart it on a weekly basis. So I was fortunate enough to have an uncle who's in the industry. He's a CMT as well, Ralph Akampora. And I was charting shares of IBM, high, low, close on a weekly basis for months. And then he came down to where I live in Philadelphia. And I go, Uncle Ralph, why am I doing this? And he drew a line under the bottom and said, what's it doing? I go, it's going up. He goes, that's an uptrend. So that was my early foray into technical analysis. And then a year later, I got to come to the floor of the New York Stock Exchange and actually go into the crowd with IBM with my little chart and meet the market maker and see the action here. And it was crazy. So then I went to Fordham University here in New York. I studied. I had an internship. Was on a trading desk, and that was euphoric. The atmosphere of a trading desk, especially in the late 80s, early 90s, there was nothing like it. And that I caught the bug, and I said, this is what I want to do. I wanted to trade. I didn't want to analyze that much. That was too much work. I wanted to just get in the pits and trade. And that internship enabled me to come down to the floor. And from there, I started with a small firm, Spear, Leeds & Kellogg, moved to Goldman Sachs in 2000, and I was a market maker. And when you see old images of the New York Stock Exchange and those big crowds, I was the one person in the center of those crowds controlling them. So I ended up, ironically enough, being the market maker in IBM, also a market maker in ICE, which is the parent company of the New York Stock Exchange. Anyone who wants to buy or sell an individual stock, especially here at the New York Stock Exchange, they had to go to where it traded. And each stock had its own market maker. So I had a group of 10 to 30 stocks by time, technology enabled us to do 30 stocks at once. And I would get buyers and sellers together. But before I started trading, I always had to game plan. I had to have a strategy where I wanted to buy, where I wanted to sell. And what was my go-to was the charts, was the technicals. I know the news and all the stocks. I know what the companies do inside and out. But when it comes to trading, when it comes to making money, to actually utilizing my skills, I had to know my risk reward, and technical analysis is and was and will always be the best tool to really measure, levels of entry and momentum swings, if something has changed in a trend. So the technicals are what I use to trade, and how it prepared me for my day. My day was a little crazy. Now technology, it's not so crazy. It's more volume weighted average price and algorithms. So one of my good friends, Brian Shannon, another CMT, he does a lot of work on volume weighted average price. And I look at those momentum indicators now because that mimics what human behavior did for years down here. And now after trading for 28 years, I pivoted to more of a strategist side. So I'm not trading, and I miss it. I miss it a lot. But I get to talk about the markets. I get to put my experience to work to teach younger people some of the things to look for when trading, give them advice. And then with Freedom Capital Markets, we're more of a global brand, and we're based in Eastern Europe and just branching out here in the United States. So I'm here to lead our U.S. presence and get the name out there, talk to our clients, talk to customers, a little investment banking too, which is a new foray for me. And I couldn't be more excited. And guess what? I get to do it here at the New York Stock Exchange as well. So to me, it's the best of both worlds.
You are really at a very big place where there is a plethora of knowledge, I guess, for anyone to learn. So, Jay, I wanted to know, how did you get, familiar to technical analysis? I just want to understand what was that year, and probably what was the stage of the market when you were entering and applying technical analysis, because most of the new entrant, young students as old as 21 years old are coming to pursue chartered market technician, right? So they have a lot to see for the market.
Yeah.
So in which year were you exposed to technical analysis, and how many cycles have you seen?
Well, I've seen a lot of cycles now. That I don't want to age myself, but I saw the .com,
Right.
run up in the late '90s where the Dow basically tripled in value. It was 3,200 when I started. We were at 10,000. 6, 7 years later, and then we saw the recession in 2000,
Right.
2001, 2002 into 2003 when the .com bubble burst. I was here for 9/11. I was here for the great financial crisis. That was probably the most historical bear market I've been a part of. COVID was an event that I never want to relive. But the thing that with these cycles, the speed has changed the most, and they happen quicker, and they happen. The downs can be very vicious, so you got to be careful. But to answer your question, the technicals, always use the technicals. What's the first thing you do when someone mentions a stock you're not familiar with? You punch in the symbol and you look at the chart. The chart tells you the story. So everyone is a technician, whether or not they realize it or not, because they're looking, oh, it's going up, it's going down, it's going sideways. These are technical things. We talk about seasonality and seasonal facts. Well, April, over the last 20 years, has been the best month here for the S&P 500 in America.
Yeah.
Well, that's a seasonal technical factor. Sell in May, go away is an expression we have here in the United States. Why? Because that is seasonally the weakest period in the market. That is technical analysis. I've always used it. I always game planned. But the CMT, that was something I always knew. I knew it was a lot of work. I knew it was a lot of studying. And I was a trader. I was a big shot here at the New York Stock Exchange. I didn't need that. I didn't need that time. But once we got into that downturn, once we had that stronger bear market during the great financial crisis, I learned something important. During a bear market, everyone is a technician. The fundamentals go out the window. And I had known all these indicators. I used them, but I never studied them. And then there were other members in the community. JC Peretz at All Star Charts.
Right.
He's a good friend, and he always got on my case. Why don't you have the CMT? I go, I don't need the CMT. I know all this stuff, but I just knew the basics. I wanted to do a deeper dive. So what I did, and this is training that no one else will ever have an opportunity to do, I would have my CMT study books, and I would be on the floor of the New York Stock Exchange in the middle of the day. It gets slow. And I say, all right, today I'm going to learn about Bollinger Bands and, the momentum swings. I'm just going to trade stocks based on, anything I see on Bollinger Bands. Then I'm going to do RSI. Then I'm going to do MACD. And I was learning the indicators, and I was doing it by trading the stocks I traded to see what worked best for me. And the one thing I learned is everyone has their own system. No system is wrong as long as it works for you. But you have to stay disciplined. And then
Right.
the hardest part is the behavioral behind it. Because once you buy a stock, you look at it totally differently. A perfect example is Tesla. My son, he was 14, talk about young traders.
Right.
And we bought him some Tesla, one share. And all of a sudden, he noticed every Tesla going by. He was checking the stock quotes 5 times a day. You change once you're an owner of stock, and you
Right.
have to make sure you have a game plan, just like I did when I came to the stock exchange. Always had a game plan every morning. when you buy a stock, you better know why you're buying it. And the technicals give you of anyone getting involved in the stock is risk management. And to me, that's where technical analysis is the most important tool. If you don't know your levels, if you don't see that a trend has changed and you have an exit strategy, okay, we're trending up, it's going right up against the 50-day moving average or just a trend line, which I prefer averages, but trend lines are fine too. If something breaks, a line of support or it goes above resistance, something's changing the stock and you have to change the way you look at it. You have to be adaptable. There are too many people I've seen blow up in their career that just they have that attachment to it. You can't do that. You have to be adaptable, and the technicals always allow you to see changes coming in the market.
Right. So Jay, probably you have seen markets from 2000s and that dot-com bubble to all the way now. So what has been the change when you were applying the technical analysis back in early 2000 or during that dot-com period, and how you are practicing TA today? And I want to focus on the aspect that specifically when we are talking about the CMT, how your decision-making skills has changed.
You froze on me again. Can you repeat the question?
No
I
worries.
heard the beginning part.
Yeah, no worries. So probably you have spent more than 20 years into the market. You have been through various cycles. So what are the key differences you have seen from your first job and now that you're in Freedom Capital in these 20 years? And specifically the aspect after CMT, what changed in your decision making? What are things that you have added to filter out the noise from CMT course or Chartered Market Technician curriculum that helps you in decision making?
I like how you said filter out the noise, because that is the toughest thing as a trader, to stop listening to everything around you and reading the headlines. Only price pays, and it's important to know that that is the number one focus of any technician. And usually price leads. And so when you talk about different cycles, COVID was one thing that was just a boom, a shot across the bow. There are black swan events. We had it here 9/11, 2001, where suddenly you had that event and you're going to go down. But the cycles are important, and I have seen a lot of the cycles, and the technicals will, when you're going through one, like we're going through one now. I don't know what they're going to call this cycle. It's going to have a cool name later on. We haven't named because we're living through it. And we don't know here in America whether or not this sideways trend that we're in now is a pause before we take another leg lower, or we're finally out of that bear market from 2022. So that is what I watch closely. I watch what we're doing now sideways. The one constant in our cycles has been the Fed here in the United States, rates. And when they are rising, the expression "don't fight the Fed," very important. But the technicals are what I always go to, because I want to look at the patterns we're seeing now versus other cycles, other bear market cycles. Is this like the great financial crisis? No, not really. We're seeing it now with some of the regional banks here in America. It reminds me more of after the dot-com burst. And if you look at charts from 01, 02, 03, and you were to kind of mirror them to what we're seeing now, the environment is a little similar. Will it be the same? No. History has a sense of repeating, kind of, but more it rhymes, it doesn't repeat. And so what I do is I study different market cycles and see where this looks like. A lot of people talk about the 1970s. I'm not old enough to remember that, but I do look at the charts. I don't see the similarities there other than the interest rates. But the technicals and the CMT, the CMT has just really given me a vast body of knowledge. And what it also is a great community. And this is how we know each other. This is where great people share ideas. Now, I'm not always going to agree with you, but I'm going to respect your opinion, and I will challenge your opinion. But, some people think we're about to take another leg up and this is going to be the beginning of a bull market. Other people think we're going to go sideways for a little while longer, and I happen to be in that camp. And come summer, we're going to get that directional change. And then there are a lot of bears, and there are some people that are perma bears out there. But as long as you can come and have a discussion and with me, look at the charts, show me history, show me ideas, that is great. So when the CMT has events like the Impact Summit, like the symposium here in New York, it's so fascinating to hear other people and what they see in the market based on their views and their studies. And I will not do the market indicators, but some people love them. I'm not an Ichimoku cloud person, but we have so many great people in the organization that and have used it wisely. I am a MACD RSI trend follower. I love multiple time frames. I love anchored VWAP. Those are the things that are my go-to, but everyone has their own process. And that's why studying the curriculum and learning about it and then engaging with the people inside the organization, it's priceless.
Perfect. That was quite an experience you shared there. So Jay, a lot of students come, they go through various levels, be it level 1, level 2, and the level 3, right? Where you are into almost system evaluation and being a very systematic rule-based trader. The insight I want from you is that during the 3 levels, which of the aspect of CMT actually was very much practical for you, which you just took. You want to suggest that students in level 1, level 2, the practical aspects, how were you able to mitigate the gap between taking the or reading the book and then applying it practically? So be it level 1, be it level 2, or be it level 3, what would be your suggestion to anyone who's just taking the level 1 and how to apply it practically?
Yeah. First of all, welcome. It's very important that you have patience when you study. Level 1 to me is more of the knowledge base, and it gives you a general understanding of the trends, of the definitions. There's a lot of studying, but if you've been following charts, if you've been trading, you're going to absorb it. You're going to be really, you may know a lot more than you already believe. But level 1 is the perfect building block. Now, I'm going to be honest. Level 2 is a pain in the butt. I did not like level 2. Level 2, a lot more of a deeper dive on definitions, and there was a lot to digest, but it really taught me a lot. The stuff I learned a lot the most that I didn't know were candlesticks, and now I love candlestick patterns. For a shorter time frame, candlesticks show you tops and bottoms and reversals and nice momentum swings that I think are invaluable to anybody. So level 2 is a challenge. And if you get through level 2, my favorite, I love level 3 because you got to put it to practice. You got to practice it. Now you learn a lot about the risk behavioral side of things, which is extremely important. That's where the test has changed since I've taken it. Risk management is job number 1, job number 2, and job number 3 of any trader. If you don't know how to say no and get out, you're in trouble. In fact, the best advice that was given to me was, 4 things. 4 things can happen when you enter a trade. You can have a small gain or a small loss. Okay, that's relatively normal. You can have a big gain, which is your goal. That's fantastic. Or you can have a big loss. If you have that big loss, you may be out of business. You may not be able to come back and trade again. You just have to avoid that one thing. And the system that is invaluable is knowing your levels and technical. And so getting back to your question, level 3 exam, that was fun for me. I got to, you got to look at chart patterns, and they'll tell you, all right, here's a chart. They don't tell you what it is. What is this bullish? Is this bearish? And tell why. So you got to actually be an analyst and analyze a pattern and express why you think it's bullish or bearish. And if you could express it carefully and back it up with details using different indicators, different time frames, and different reasons, and then put risk reward metrics where you would buy, where you would sell. That was normal after studying for 1 and 2. And that was the most fun. And then past that, having that CMT next to your name really adds a special credence to when I talk to somebody and I know they went through that exam, like I went through it. I'm like, oh, okay. I really have a respect for it. And in my career, it helped me pivot from just a trader here on the floor to someone that can talk about the markets and talk about it with some authority, because I have the trading background and now I have the CMT to my name on top of it. It's, you know, I didn't realize how powerful that was, having that next to my name. And the network is vast, and it's such a great group of people. So to me, the process, one was fun, two was tough, three was I'm getting this done and I get to apply what I learned. And then once you have it, as you know, the network is vast, and you know, it gives you a lot of credence when you're talking about markets.
Yeah, right. Because it's interesting, Jay. You spent almost more than 2 decades, and during the last few years, last decade, you had charter. Because my another question was, you know, a lot of students are having some professional commitments or personal commitment. Once they are in level two, I've personally seen a lot of people struggling with the motivation and inspiration, obviously being involved in their professional career, and especially level three, right? Because that is where it's all about being practical. So what is that few
Yeah.
word or few sentences of inspiration or motivation that you want to give, and especially for level three candidates who pass? Having that charter, you have already answered that, but this tussle, this constant struggle of coming from level two to applying the charter, this is actually you know, very grinding for some of the candidates. So any piece of advice you want to give them?
Oh, you know, if you enjoy this, then you're made for this. There are going to be some tough times. It's going to be tough to find time to study. Everyone has their job, their families. You know, take your time. There's 6 months between every exam. Use that time wisely to just do a chapter a day. Try to do what I did and utilize learn by doing, use an indicator and paper trade. You don't have, you know, no one has the luxury that I did, is, you know, being a market maker and getting to
Right.
trade with, you know, the firm's money. But, you know, paper trade, take notes, and then find study partners, find someone to talk to that's also going through it. Use Twitter, use social media, because I know the CMT tries to get people together that are going through level one, level two, level three, because we're not competing against each other. We're rooting for each other. And
Right.
it can be rough. I failed level two by one question. I was so upset. I was so upset. I knew the test maker, and I went into his office. I
Right.
yelled at him because there were a couple questions that were very big, but it I took some time off. You know, I didn't get my CMT till 2017. I took level one in 2009. I took level two in 2010. And then when I failed it by a question, I was so angry. I was so upset. I'm like, I'm not going to do this anymore. I have a job. I don't need this. And then I finally went back and I got it a few years later. So don't do what I did. You know, plow through it. Once you get it, of a community out there for you to enjoy, and it does open doors when you're looking for a job and they're looking for someone in an analyst role. Those CMTs likely will be there is out there.
Right. So that is like one piece of advice I'll highlight for anyone that's coming from Chief Market Strategist at Freedom Capital and also the Executive Governor at the NYC, that he covered this journey. It might have been hard, it might have been tough, but he did it and probably got the charter, and now he's carrying it very proudly. Thanks, Jay. Just one piece of question left. You have been into market making. What are the specific trading rules or specific setups or principles that you live by, that you follow, and that you cannot live without every day being on the floor at one of the oldest stock exchange? What is that one principle you want to share with anyone?
Yeah. Yeah. Go to sleep at night. Don't carry risk overnight if you don't have to. If you're a day trader, if you're a swing trader, you have to take on a little more risk. Overnight risk for a market maker was the worst risk we could take, because you never know what would happen after, you know, 4 o'clock here in the United States after the bell. Try to separate yourself and get away from trading and not think about it all the time. Exercise, socialize, spend time with family. These are things to get your mind off of it, because it can be consuming and it can eat away at you. I had nice hair when I started. You had no gray in your
Right. Right.
when you started. Trading can be stressful. We just need escape from it. Stay true to your system. Don't let your emotions get the best of you. And then once the trading day is over, walk away. But always remember and always take notes. Take notes of what you did right and take notes what you did wrong, because you're going to make mistakes. We're all going to do that, but learn from them and don't make the same mistakes over and over again.
Thank you, Jay. Thank you. Thank you so much. That was wonderful to have you. And especially one thing which I really learned and which everyone should learn from this in terms of trading overnight risk. And secondly, we are rooting for each other. We may argue, but we are rooting for each other. So thank you, Jay. Thank you for your time. I won't hold you up because it's early morning over there, and you're live down there on the floor.
Sure.
Thank you so much for your time. And I'll surely let you know, we'll be doing this video going live on Saturday. So,
excellent.
Right. I'll just give you a heads up just before it comes up. I'll share the link.
Okay. Excellent. I hope everything came through clearly and you can edit what you need to, and I'll promote the link for you. That would be great.
Right.
Yeah. If you want to stay and talk for another 4 minutes, the bell's about to ring here at the New York Stock Exchange. That
would be fantastic. That would be fantastic.
Right.
Also, Jay,
let me get a drink.
Please have a water. Please have water. I'll just have a one.
No, go ahead. Keep talking.
It's been a long journey for you. Since 2000 to 2023, you have seen the best and the worst of the time. What were the learnings from your first job? That was in 2000, and you are still carrying them because obviously you had great mentors down there. So what were the learning from the first job that you are still taking? And probably after doing CMT, that was further polished and you went further into it and explored that subject. Is it behavioral? Is it the risk management? Which aspect is that?
Well, first of all, I'm always learning. You're always learning. And that's what's great about being involved in the markets. If someone ever tells you, and I'm experienced, I've seen it all. I've been through this.
I think it froze, but we'll be back. It's morning time. Yeah, go ahead, Jay.
Okay, I got your question. I can just go in and answer it, and we can edit it out. All right. We've got 2 minutes and 30 seconds for the bell, so you can say you heard the bell. All right. So there isn't one piece of advice because I'm always learning, and that is what's great about the markets. This place, markets in general. I have been around a lot of cycles. I have seen a lot. But if anyone ever says I've seen it all, they don't listen to them, because I don't know what's going to happen after this opening bell rings. And keep listening; it's going to ring behind us in a second. That's what's exciting about the marketplace. You're never sure what the next thing is going to be, but you have to be ready for everything. And to me, the technicals, my mentors, people have always said, have a plan in place and be adaptable. Just because you bought a stock doesn't mean it's going to go up right away. You have to be patient. You have to have time, and then you have to pivot away, because some of the best trades I made were limiting at a loss. So make sure no one ever tells you they've seen it all, because that is what's exciting. That's what we debate about. We debate about what's next. If we all agreed, then technical analysis would be the best tool to have. But risk management is what it's all about. And yes, I've had some great mentors, and you're going to learn something from everybody, but create your own system and take a little from everybody. There isn't one person that's got it down, Pat, but there are people like Warren Buffett, someone I always followed. buy something you know, buy something over the long term. He's not a technician. Although if you watch Occidental Petroleum, he's the support level on Occidental Petroleum. Every time it gets to a certain level, he's buying stock, he's buying stock. But you know, I like to read, I like to talk to other people, get their opinion. But at the end of the day, as a trader, you're only true to what your decisions are, and you have to have a game plan, and you can't go and ask somebody, what do I do now? What do I do? Now, if you listen, we're about to open market here in the United States on Thursday morning. We're off tomorrow on Friday.
Right.
April 6th is looking relatively flat. The S&P futures are down. I'm giving you a whole market update here. But
Nice.
here, let me see if I can just bring this over
That
so
is
you can see what's
fantastic. Yeah. Oh my God. It's beautiful. Wow.
So it's a quiet day. I had my finger over the lens. I apologize. For
That's
that.
fine. That's fine, Jay.
But you can edit that however you want.
No worries.
I'm sorry about having my finger.
No,
But,
that's all right.
Yeah, the market is open. I got to get back to work.
Yeah.
But it has been great talking to you and
Thank
your
you.
audience. And
Thank you.
to all those CMTs out there, you got this. You guys got this. It's a journey, but it's well worth it.
Right. Thank you, Jay, and happy Easter holidays. There's a long weekend. Enjoy yourself, and wish the same for everyone in the family. Thank you so much for your time.
Thank you.